Shonali Basak is the Chief Investment Strategist at iCapital, a global fintech leader transforming access to alternative investments. In her role, Shonali leads the firm's strategic thought leadership across public and private markets, delivering data-driven insights and actionable content to financial advisors, investors, and asset managers. She plays a pivotal role in shaping iCapital's investment outlook and strengthening its position as a trusted voice in the global investment ecosystem. Prior to joining iCapital, Shonali was Bloomberg Television's lead global finance correspondent and anchor. She covered major financial institutions, hosted the flagship morning show Open Interest, and led Bloomberg's premier annual conference, Bloomberg Invest. Her newsletter, Wall Street by Basak, earned acclaim for its sharp commentary on market trends and industry shifts. She also created and hosted Bullish, a docuseries spotlighting influential voices in finance. Renowned for securing exclusive interviews with top Wall Street CEOs and breaking news on market-moving deals, Shonali has built a reputation as one of the most insightful voices in financial journalism. Well, hello out there in HFG land. My name is Casey Craig, and I'm the founding partner of Highlander Financial Group. And today, on our YouTube series, we've got a very special guest, Miss Shonali Basak. Welcome, Shonali. She is the Chief Investment Strategist for iCapital, which is a key partner of ours in our structured product offering. So welcome, Shonali. It's great to have you here today.
Really nice to see you, Casey. Thanks for having me. This is a really awesome series.
Yeah, great. So we're very excited to have you, and we're going to talk a little bit about AI today because there's a couple of white papers that your team put out over the course of the first few months here in 2026, and obviously it's a big topic. Probably the second biggest topic in the news right now as it relates to really anything, but it's a big topic, and it's found its way into really everything we do on a daily basis. So the first question I have is really just a basic, so we're hearing about AI everywhere we look, and at a very high level, it's changing everything we do in investing. But while it is changing, maybe you could highlight some of the things that you see changing in the markets the most, and then maybe some of the things that have stayed the same.
I can't tell you how much I love this topic because I have long been studying financial markets, but more so for more than a decade, I've covered how technology has changed financial markets. And I think the whole idea that AI was new from the beginning was a little wild. What was new was generative AI, ChatGPT, the advent of it in 2022, and then everybody realizing how fast this newer age of technology was going to evolve. And this year, how fast that even the technologists behind it are finding it moving across the industries that they operate in, from consumer-focused industries to enterprise-focused clients. So the speed, the rate of change, I think, is one of the things that the market is having the toughest time grappling. The other thing I think that a lot of people are struggling with is just how pervasive the technology will really be, and not just kind of on a, hey, how will AI really impact different industries, but how will it not just change those industries at the margin? Where is AI going to make a fundamental impact? Because there's a huge difference between, kind of using Google sometimes and then Gemini others, and having these technologies make a transformative impact to how companies work from the inside out.
Mm-hmm. Yeah, that's a great point. I mean, I can remember driving between one client meeting and another, listening to Bloomberg, possibly something you did even, and I would be saying to myself, like beginning of 24, I'm saying, or end of 23, I'm like, okay, or end of 24, beginning of 25 probably would be a better time frame, and I'm thinking, and I'm listening to the anchors on Bloomberg say, so how do they monetize this? What is this thing going to be? And then here we are, 26, and it's like, wow, that escalated quickly. We're all the way down this path, and we're already seeing the ways that these industries are bringing this product. I also like what you said about AI is nothing new. It's just we're putting it in the hands of everyday people now in a way that they've never had access to it before. So thank you for that. That's a great answer. So Shonali, continuing on that vein, suggests that, not every company in the AI world is going to be a winner. Okay, not every stock is going to be a winner just because it's AI. So maybe in some simple terms, can you define why some AI companies might win and some might not?
Yeah, let's just start with the technology industry, because when we think about this first wave of disruption, we're thinking about how AI is going to impact very large companies that are already in the AI race. Think the Microsofts and the Apples and the Metas of the world. But then what we saw in 2026 at a rapid scale was how AI would impact software companies in particular. It's such a natural question, right? Because if you're thinking about software companies, it's the closest to the changing waves of AI. So when you think about software companies, there's legacy software companies that might have incumbent advantage. So big, sticky bases of customers. Those companies really have had to invest prolifically in AI because this is the technology of the future. And if they hadn't done so, then they might not have been able to survive this wave, but they've been making those investments. Ideally, they would have been making those investments at least since 2023, if not since 2022. So some of those companies will be absolutely fine. Now, we think about software companies also that are other regular way software as a service companies. And have you ever, Casey, vibe coded? Or do you know much about vibe coding?
Never done any of the vibe coding. No, I haven't.
So
Tell me more.
So what's interesting about vibe coding is it's really a wave that has taken off and has allowed people to start really, I wouldn't just say learning how to code, but being accessible to coding in a way that hadn't been done in the past. So let me put this in practical terms. When I was back in grad school, I had to learn to code because I got my background in quantitative finance. So really what you needed to do is learn how to code to be able to input your massive data sets to figure out how you wanted to build models and all that jazz. These days, I probably wouldn't have had to learn those skills the way I did in the past. I'm trying to think about, wireframing, right? Technologists just have to really literally go in and write out the code. Now you can kind of just ask your Anthropic or OpenAI, Claude, not Anthropic, but by Anthropic.
Right.
You just ask them to help you do it. And so you're able to code and create software much faster than you would have been able to in the past.
I've actually got an example that that works for that, because it turns out after hearing the definition, I may be an amateur vibe coder. It turns out. So for instance, if you have two spreadsheets,
Right.
and you say, and you're looking at one spreadsheet on one screen and another spreadsheet on another screen, and you say to yourself, boy, I wish I could connect these two data sets, and then have some visualization of how the two play off one another. If you take those two spreadsheets and then use Microsoft Copilot and ask it to tie the two data sets together and then present you with information, that's AI. That's what AI does. And I think that's a good example of what you were just talking about.
It's interesting. It's an interesting application, right? The vibe coding kind of phenomenon was very much about how a lot of entrepreneurs have started to take coding and development into their own hands in pretty specific ways. But you're right, this has really been something that has taken off, and people are realizing that in this new internet, applications talk to each other, and you can integrate them within each other, and that will help allow move data, create applications in ways that are faster than ever before. And a lot of people are afraid out there about what AI will do with jobs and current capabilities, and I get that. But at the same time, if you learn how to use it, you can arguably make a business faster than you ever have before. And so I always say that we can be afraid of the future, or we can just take it into our own hands. And I hope we do the latter as best we can.
So I knew I was going to do this eventually, but I'm gonna ask you a question off script. So that opens up a whole conversation about how we're educating in colleges and universities. How we're bringing kids out of school and giving them these vocational skills that many people argue the U.S. system lacks that part of the system. So have you seen any universities or colleges starting to teach this?
Well, there's this at the school level. So where I went for grad school was NYU Stern. And so AI, I recently spoke there, and it's a big topic among students, and it was definitely a conversation of how young people are able to take these learnings and bring them into the workforce. And so, again, not to stick too much with finance, but what had happened was, even recently with new hires that we had brought here, we had asked, well, okay, did you use any LLMs to do your research? The answer is usually these days yes. And I think even a year ago that would be very, very discouraged. But these days, and the conversation I had at Stern was with a senior person at Goldman recently who had said that for work and in her personal life, once a day she makes it a rule to use AI. And that was the advice she gave to the students. I fully agreed with it because it is a little unavoidable these days. And so, and not to mention, I would be lying if I said I have not looked up very interesting things on a chatbot just to get some preliminary information and baseline ways of thinking about things. Now, I would caution that by saying, well, wait a minute. One thing that I learned as a former journalist when I was in school, also fact check everything. Go look at original sources. Go look at the original documents. I think that's really important as an investor too. You want to have the clearest, most accurate, and most contextual information. And I think what my fear is that young people in school who are adopting this at a very fast rate are not equally saying, well, wait a minute, where are the limitations? What is this not telling me? What else do I need to see to make my decisions?
Mm-hmm. Yeah, it's a great point. I've more than once in the last 6 months gotten in a lengthy argument with my chatbot about, are you sure? Are you taking into account, this particular thing? And then it'll come back and say, well, actually, if you want to include that as part of our research, then that does change the narrative, and then you start to see there. And that's the point, isn't it? It's generative. Mm-hmm. It's not supposed to do your thinking for you. Give you sort of a research assistant, and then you're framing the conversation and driving the narrative, and that's I think that's an important thing.
So yes. I was just thinking the other day. So I similarly created a program to deliver me every morning just a quick summary of all the overnight news, all in financial markets. How did Asian markets perform? How are US markets setting up? It delivers to me at 5 a.m. every single morning. And in the last week or so, I've just been training it more because I've noticed that there's some information that I would have liked that they didn't give me. And so, to your point, it is iterative. I say, well, wait a minute, I would like a little more treasury market information as well, or a little less from these types of sources and a little more from those types of sources. So it is very iterative, and you can help make it work for you. But again, it does not, and I think that this is an important part of things that I think you might have wanted to get to anyways, it doesn't replace human judgment, ultimately. And you need that, really, don't you? Because you're never going to see what you're not seeing if you're the only one training something, are you?
Yep. Yeah, that's a good point. So, leading into the next question, so for investors that are thinking about AI and trying to frame it, there's this tendency to want to compare it to the tech bubble, the AOL, MCI WorldCom bubble of 2000, that particular time frame. So, in that time frame, AOL emerged as a big winner, but then an MCI WorldCom, but then they weren't later. So there were a lot of names early, and then a few big names popped out of it. Is that what we might expect with this particular boom in AI, or might the bench strength be a little deeper in this run?
This is a very good question, because I do think that in this wave of technology, there are certainly a lot of moving parts. There are a lot of players in the ecosystem, right? There are the semiconductor players and the chip players and the hyperscalers and the energy providers, the cooling systems, the land itself. where data centers operate off of. And you just think about that food chain, and certainly other technological booms have had that, right? And there's the question of, are we in a bubble? We're asking this after we've already seen a correction, right? But that doesn't mean that it's a whole-scale bubble, does it? I mean, it does mean that we have corrected to the point that valuations have come down meaningfully for a lot of companies that are very likely to make it through this wave of AI and fuel a lot of the companies of the future. I agree that not everyone's going to win. Cannot be the case. I do think that we're probably going to feel that more profoundly in software, where, like I was saying earlier, kind of those traditional way SaaS players that can be replaced by newer players will be a very big thing. We will feel that. We will see that in real dollars, especially because so many people, public and private companies, spent a lot of time and effort on those companies at sky-high valuations in 2021. In the private markets, you're going to see that shake out a little bit. But after that, I think once you kind of get past that wave of pain, it's not, first of all, it's not going to be all that as dramatic perhaps as people are saying. And second of all, I do think that if you focus on the software players that are AI native, then you're starting to see another industry that is going to really feel the benefit of some of this technology that has the potential to improve productivity too. And that doesn't need to be, again, in the worst scenarios, you hear people talking about a decimated workforce. Listen, let's just talk about the macro here for a second. We're looking at a workforce here where the Dallas Fed just said this week believes we can see negative payroll growth. How insane is that? We went from over 100K, around 140K payroll growth monthly to closer to 60 to now what the Dallas Fed is seeing as negative because of how many baby boomers are retiring and rolling out of the workforce because of lower immigration. And so It's hard for me to see AI in the near term making a horrible dent when the workforce is already seeing trend growth that is lower to negative, if you believe that.
Yep. Yeah, I so agree with that. And thank you for saying that. That's really, it's hard to get people to say that, that AI is more likely, I think, to change the workforce than it is to make it, unemployed. So, and also what you said there is something I've been talking about with my clients quite a bit, which is, AI is not just computer chips and computing power. It's also the energy industry is transforming rapidly. I mean, the fact that AI has come at us so much actually has created one of the most interesting conversations I can think of, ever, which is how fast even the old, and it sounds crazy to say this in the moment in time we're at right now with Iran, et cetera, but even the traditional fossil fuel energy companies are spending probably more money to shift towards renewable energy than they are on fossil fuel projects. I've read that in multiple places. That's happening. And that's because they're not crazy. They see, hey, we're an energy company and these data centers need energy. How do we get there? And then here's another thing. Fossil fuels, or not fossil fuels, but rare earth minerals. That's a topic that keeps coming up, and people seem to think that the only rare earth minerals in the world are in China, when that's not the case. Actually, we have tons of rare earth minerals here in the United States, but mining them is not so easy because of our laws. So I'm not asking for a commentary on that, but it's just, that's all happening right now. And it's such an interesting thing to me to see how this is all going to play out.
It's interesting. On one hand, yes, there are rare earth minerals here. China definitely has kind of the lion's share. So there is a dynamic there, but when it comes to energy, you are absolutely right. It is not just oil and gas. There's simply not enough energy that is being made available fast enough for regular way use, let alone the data center build out, which will have enormous needs and is undersupplied by a landslide. So it is multiple sources of energy, and you're seeing the world quickly try to make available new sources of energy, right? nuclear, will that work out or not? How do people think about facilitating that build out, if at all? Natural gas is the most undertold story of our lifetime, probably. And I completely agree with you that renewable energy sources are going to be an important part of the story moving forward. And given the underinvestment that there has been in that space relative to other spaces, there's a lot of white space for investors to capitalize on, and a lot of demographics and influence that would support a build out like that.
Yep. So, given all this, sort of, two-sided part of this whole conversation, I mean, as we look ahead, what should the mindset of an investor be when it comes to AI? Should it be focus on these few things, or should it be keep an open mind, or what's your feeling?
I know we focus this on AI and not so much the geopolitics. I do want to make one comment about where the rubber hits the road, because somebody made a comment to me the other day about how, like AI won't be impacted by any of the geopolitics here, but with energy prices soaring, with memory chips in shortage, with supply chains in constraint, and with helium prices rising. Did I say helium? I mean, there's so many little moving parts here. Brent and WTI still above 100 for as long as it was. That means that this build out will be more expensive. I think that that's an important part of all of this, because we've already seen a lot of increased investment announced since the start of the year. And I think you need to recalibrate and ask yourself, well, wait a minute, how much more investment will be needed? And the answer is a lot. And so you're seeing that desire play out in equity markets, you're seeing it play out in fixed income markets. And I think when you think about that as an investor, you have to ask yourself two things. What part of the food chain do I want to be most exposed to? How do I diversify across that food chain, knowing that AI is going to be a little bit a part of everything? And then importantly, knowing that now your fixed income exposure, because public fixed income indices now include a lot of AI exposure, your fixed income exposure and your equity exposure are both AI heavy. So therefore, where else do you want to buy? That's not AI at all. I do think that that's a really important question, because I think a lot of investors are more concentrated than they realize in a single theme. And I think it's a really important thing. I think it's no question it will be even more concentrated because it will impact everything. But you have to ask yourself, what is diversification? How am I diversifying within and outside?
Yeah, it's a really great question. I mean, because, AI is impacting so many different industries now, so I think like the S&P 500 has an interesting job going forward in breaking up what's in what sector. I mean, it's already tough to, it's been tough to put Amazon in a sector, or, because is it a tech company, or is it the app button that I'm pressing, or is it AWS that's driving this thing? And so where do we put it, right? That's great.
Mega IPOs also, they count out that index inclusion might come faster for some of those companies than maybe ever before. And so, you just have an entirely different mindset heading into 2027 about what kinds of things you're exposed to.
Well, one other thing we didn't discuss is if interest rates continue to drop, then, I always tell my clients, I believe that tech companies like to use other people's money more than their own cash to try to grow. And so, that makes mergers and acquisitions a lot more likely. Some of the big companies buying some of these up and coming small companies. And then because they like to use their cash to, plow it back into research, development, coding, growing their internal product.
You mean the American dream? Leverage?
Yes, of course. Debt financing. I mean, it's a powerful thing for especially when when you don't necessarily need the money, but you can get the money, and if you can get it cheaper, then you're going to start seeing, I think, some of these mergers and acquisitions that really shake the whole thing up fast.
I completely agree. And given the sell-off that we have in the market, I think it's just a matter of time.
Yeah, and I think too that like what we're seeing with the energy industry, we might start seeing some mergers in things like energy that you wouldn't necessarily expect because it starts to make more sense. I just think it's one of the most exciting times I've ever, I've certainly ever been involved in personally, but that we've ever experienced here in the U.S. So who knows though? We'll see where it all heads. So last question for clients that are watching, the market on a day-to-day basis. What's the mistake that you see people make the most in times like we're in right now, where there's just so much news, so many things to consider?
Overconfidence. I think when a lot of people look at the moment like we're in right now, they're quick to draw conclusions. And the reality is that we don't know. There's a lot we don't know yet. And that means that you really have to be data dependent, and you can't make snap judgments around, all right, well, how much is inflation going to be spiraling? Well, we don't know yet, actually. That will depend on a lot of things. It will depend on how long oil prices stay high, how long aluminum prices stay high, how long those types of commodity price elevations feed through. Will it cause demand destruction? Wait a minute, will the fiscal offset some of that? We actually don't know what the second half of the year will look like in terms of what Congress can approve in terms of fiscal spend for Americans that might offset some of these price pressures. So, I don't want to say we're totally wait and see. We have some information, obviously, but let's not make conclusions about things we don't know yet. Let's watch, let's monitor, let's be prepared to act is my strategy about going around things. That people are very quick to act.
Mm-hmm. So it sounds like, it's kind of funny how this always seems to come true. It kind of sounds like the more things change, it's more like back to the same stuff. Stay diversified, have a plan, have a belief in the plan, but don't just like dive into one part of the market because you think that this is the way it's going to go. And I've personally, when you do what I do for a living, you've made every mistake, a couple of times. At least I hope I've made all the mistakes there are to make in the past and not in the future. But it's really about you got to understand who you are, right? As an investor, and what your goals are. Who am I? And because if I know who I am, I know what I'm looking for and what I need out of the marketplace. And from there, it's about diversification and sticking with the plan, which is what we're here for. So, wow, this has been great. I really appreciate your time today.
Yeah, very much the same. Good to see you. Hope to see you again soon.
Yeah, we're gonna definitely keep trying to do these, and hopefully we can get you back on. And man, what a great honor to have you here today, and we're so thankful. Thank you so much.
Thank you. Very much the same. See you soon.
Okay.